Hello, everybody. This is Joshua Hayes at BigWaveTrading.com and BigWaveTrading.net coming to you with June 30th stock market wrap-up for you to use tomorrow. March, April, May, June. On, I believe, July the 1st. I believe there's only 30 days in June. I can't believe I'm this old and I still don't know. But oh well, who cares? It's not my forte. My forte is the stock market, so let's get to start analyzing. First problem that I have here with today is not much. New York Stock Exchange was down today 0.96%. That is a technical distribution day with volume coming in higher than the day before. But once again, I ask everybody, instead of just blindly saying, okay, price down, volume up, distribution day, to go a little bit further and take a look at how the index is traded. And if you look closely, you can see that there's a bullish intraday reversal. The indexes were able to get all the way down to 58.62 at one point intraday on the New York Stock Exchange. Still managed to close at 5,905. So well off the lows. Nice support right at the 200-day moving average. 200-day moving average is above the 50-day moving average. Hopefully soon the 50 can turn up, and it just shouldn't be that bearish right now. But however, we do have to be honest with ourselves, and if we want to call this a churning day, basically the higher volume negative 0.06% move on the 10th, same with the higher volume, but the 1% move only on the 11th, we can do this. We'll go since the very top here. In June, we have one churning day, two churning days, a distribution day, another distribution day, 5, another distribution day, 6, a churning day, 7, another distribution day without volume, 8, a lighter volume rally, another lighter volume rally, finally a decent rally with strong volume, and another distribution day, number 8. So we're starting to add up on the distribution day since the June top. However, overall, the indexes look good, and one of the things to look at is a weekly chart. And as you can see on a weekly, look at the uptrend. During the uptrend, there was high volume. As it got up, all of a sudden, volume starts to contract when it got near the 50-day weekly average that I have up here. Pulled back right there at the line, and so far, so well. It's just good to see lower volume on the pullback. However, today, the lower volume, though, is a good thing because the selling is below average. So really, the distribution day that happened today, very weak. Hard for me to fall too hard and like, oh my God, I got to get so bearish here, especially with all my charts holding up. I am now long over 100 stocks, and including speculative stocks I've given Platinum members. There should be over 140 to about 150 longs right now. They're almost all, if not up on the day. Yesterday, we had 96 yesterday. And how many full sells? RATA and ESBF. The day before, we had 70-something, 75, 76, one full sell. So 3 sells in the past 2 days compared to 50 buys, right around there. Insanity on the long side, and it's just hard to get bearish, even with SP 500 showing another distribution day today, technical-wise. Look at the bullish tail intraday. That's all it takes for me. Looking at the NASDAQ now, you can see another bullish intraday tail. The only difference is that this one closes in about the middle to lower end of the range. Still, to come off the 1824 lows and close at 1835 is very impressive. And if you think it's a huge distribution day, volume was slightly over the day before. And not only that, it was well below average. So taking a look at the weekly of the NASDAQ, we still have the same pattern that's been emerging since the March bottom. Higher volume weekly rallies. And then whenever you get the volume bars above the weekly average, you have very tight price action, and then you have just more gains. So the NASDAQ looks great. That's our leader. However, what's most important, though, are how the IBD index is doing. So let's look at the IBD 100, my preferable favorite one. And as you can see today, it was down almost, not 1%. Relative strength line overall held up very well, basically flat. So I got to admit, it's a good news that it didn't give that much up. IBD index 85.85. Relative strength line basically flat, and it didn't even fall down 1%. Now to show you how much SP 500 was down, because that's what it compares it to, you can see it was down almost 1%, down negative 0.850. However, most of those two IBD indexes, that looks about 0.75, and same with the 100. So they're still leading, and as long as these indexes are leading, which they only have been recently, I'd say, since the June lows, which is not very long, possibly the May lows, they started to do a turn, but whatever, it isn't that confirming. So things just don't look too bad to me, guys. Even though it's a distribution day, I think it's bullish in a way because what? Friday, after we had all those huge longs and after I had that one stock up 56% and so many others up big, the headlines read, Dow Jones Industrial Average falls, oil falls, the dollar falls. Dude, that's kind of negative. And then today, all I hear is people talking about, well, it's another distribution day, number 5 for the Dow Jones Industrial Average if you don't count the churning days, 2 for the NASDAQ if you don't count the churning days. Well, you know what, man? Whenever we sell off and we have our distribution days with tails, like on the 23rd, which wasn't distribution day, we had tail. The only distribution day was really bad was the 22nd, and that came on lower volume. But besides that, all of our other distribution days seem to have tails in them whenever we go down. And it's kind of hard whenever you have tails action showing intraday support every day to get bearish on the market. Now let's see how much time I still have left. Oh my God, great. Plenty of time, so I'm doing great with this thing. Let me look at gold. Gold's starting to break down. Now, I tell you what, if gold will actually break down and go lower here, I don't mind personally because I've already bought some, but it was in between 800 and 900. The sad thing is that the first time I went bullish on the metal was right here after September 11th. So after September 11th, I remember telling my great friend, a gold dealer, you know what you should do? You should load up on gold. You should buy your inventory of gold. Did he? No, but look at what the price was. 290s, and then it even dipped back down to 280s, 270s. He could have loaded up. I mean, he had a year almost to completely load up at under $300. And, of course, he didn't listen to me, and I didn't listen to myself. And as it went just zooming along, it just had a ton of fun moving up from 300 to finally 400, hitting 400. Soon, not too far after that, it was hitting 500. And then after hitting 500, of course, as you know, it just continued to rocket off. I'm going with you year by year so you can just watch how it grew. Watch how it stays above the 5200-day moving average line the majority of the way. Look at it just rocket up. It's just crazy. Excellent action. And there we go, getting around the topping area right there. Since then, having problems. Started to move again in 2009. However, now it looks like maybe we want to go lower. I don't know. But still, overall, if gold can hit 800... guess who's buying more bullion? And if gold can hit 700, guess who's buying a lot more gold bullion? Why? Just in case shit hits the fan. If shit hits the fan, and if I have about $1 million worth of gold, that'll probably be worth over $100 million. Study the Weimar Republic. Study Zimbabwe. Look at what happened to their dollars compared to gold. So I'm going to, even if crap happens, and if I only have 10% in gold bullion, I'm going to become one of the wealthiest men in America simply by just having gold. So, can't go wrong with that. Silver should be confirming this. Silver breaking down, yes. Platinum breaking down. The only good news is that the NASDAQ and the S&P 500 isn't. So, it is quite possible that thanks to the back of the beautiful market in China, let's look at the Shanghai Composite, we're going to be able to make some money without seeing any inflation. Look at China. Oh my God, the stock market is on fire. Unbelievable. Just unbelievable, this market. I wish I lived in China, and I'm not going to lie, I wish I could move to China tomorrow. It's up 72% since the November bottom already, and there seems to be no stopping it whatsoever. And so I'm going to go ahead and just enjoy watching China run the hell out of itself to higher highs. Our stocks, we're starting to get to see more Chinese listed. Look at these two new ones. CNR, China Networks Holding, and then I know of another one that just came out too. I can't even remember. Let's see if I can find it by looking up China in here. CHNR. It was brand new. But look at all the China stocks now. This is awesome. So now that we have all these Chinese, maybe this, nope, that's my beautiful one. Probably won't be able to find it. Let me just look at this one, CBEH. There it is, CBEH. So there's your new Chinese stock. CNR, there's your new Chinese stock. Thank you, God, for letting these Chinese companies list in America. Because, folks, look at my KONG long. From the time I first bought it in April to now, it's up 99%. Yesterday it was up 103%. I hate to tell you, we're not going to get those kind of moves probably in the United States of America stocks anymore, unless you really like coffee. And then if you did, maybe you bought this gap up on DDRX, and here you are sitting with a 435% gain in 2 months. So I love China. Chinese longs are still my most favorite, then the canned slim longs, then the beautiful charts. We still don't have any perfect charts, so we're going to be a ways away, I think, like months to, or weeks to months before we get to see them. But we'll see them eventually. Anyway, I hope you've learned how to read the market correctly. For all you haters out there, keep on hating. I love it. Aloha.